Hello, and welcome to today's webinar where Urban Haven Group, Kelly Pocock, and I'm Tanya Hamilton, are hosting Jenn McLean to talk about reverse mortgages, which is very exciting. Prior to that, Jenn has been with us a few times now talking about different ways to build wealth through real estate. We'll post some links to those videos as well. If you haven't watched them, check them out. All right, Jenn, over to you.
Thanks so much. Thanks for inviting me again. And I'm always excited to talk about mortgage strategies. And this one is one of my favorites, the reverse mortgage. This is no longer a boomer mortgage. My own generation, Gen X, we're staring down the barrel of the retirement gun now. And for those who are at least 55 years old, that's reverse mortgage eligibility age. I'm not quite there yet. So this is an important conversation to be having about using equity in your home to provide a financially free lifestyle throughout one's retirement. So as homeowners approaching retirement, I would say that the general vibe is cautious optimism. So many are asking, will my savings last? Can I afford the rising healthcare costs? And how do I help my children financially without compromising my own future? And as a mortgage broker, I have the opportunity to guide these clients toward strategic solutions that are going to protect their lifestyle and their legacy. And one of the most underutilized tools is the reverse mortgage. So what do these early retirees care about? Financial security in retirement, healthcare planning and unexpected costs, helping their children and their grandchildren financially, and also preserving their lifestyle and their independence. So a reverse mortgage essentially acts as a tax-free way to access your home equity. It's also a strategy to delay RRSP withdrawals, which is going to reduce your taxable income. It's a tool to supplement retirement without selling the home. And it's a flexible solution for things like travel, healthcare, or gifting funds to family. So retirement looks very different than it did even a generation ago. More than 90% of Canadians who are 55 or older want to age in place at their home. And new research shows that 6 in 10 people say they can't fully cover the costs of in-home care. And all of this kind of came to a head during the pandemic. A lot of shifting viewpoints, a lot of people starting to think more about what is that going to look like for us. And so they're concerned they can't fully cover those costs. And while 22% of Canadians plan to tap into their home equity to cover in-home care costs, even more say that they didn't even know that this is an option available to them. So a reverse mortgage is a really smart way to access the equity that you've accumulated in your home as tax-free cash. Even though reverse mortgages have been in Canada since 1986, there's still a lot of misunderstanding, and it's important to separate the myths from the facts. So I'll go through kind of the 6 top myths of a reverse mortgage. Okay, so myth number 1, the bank will own the home. That is not true. With a reverse mortgage, the homeowner still retains title ownership and maintains ownership of their home. Myth number 2, the homeowner will owe more than their house is worth. So since reverse mortgages have been around, over 99% of homeowners have money left over when their loan is repaid. And that usually comes when they sell the property. Myth number 3, a reverse mortgage is considered a loan of last resort. Many financial professionals will recommend a reverse mortgage to supplement monthly income in retirement. Number 4, a reverse mortgage has many expensive fees. This is definitely not the case. There are one-time fees to arrange a reverse mortgage. Just like setting up any new mortgage, there's going to be some costs when you set it up. But these fees are going to be paid for with the funding dollars so that there's no out-of-pocket expenses to the borrower. and they are not prohibitively expensive. They're usually a maximum couple $1,000s to set up, if that. Myth number 5, homeowners have to make monthly mortgage payments. This is the beauty of the reverse mortgage. There are no monthly payments. So as long as the homeowner is living in the home, they're not making payments on that mortgage. And myth number 6, I'm not eligible because I have an existing mortgage already. So when you set up a reverse mortgage, it's going to pay off your conventional mortgage along with any other secured debt on the property. And then whatever is left remaining is that tax-free cash that you'll have. Retirement should be a time to enjoy the life that you've worked so hard to build, but managing debt with a small fixed income can feel overwhelming. This is where a reverse mortgage can come in as a tailored solution to consolidate debt while staying in the home you love. So why would you consider this as a debt consolidation strategy? Well, one, there's those no monthly payments required. So that's going to free up cash flow while you're paying off your high interest debt. Simple qualification. There's no income or credit score required to qualify for a reverse mortgage. The borrower is qualified by their age and the property location only. 3, preservation of retirement funds. So not having to withdraw additional retirement funds to pay off debts is definitely going to save you a lot of money at tax time. And these are tax-free funds. You can access up to 55, sometimes 60% of your home's equity to reduce your financial stress tax-free. Okay, so I have a few case studies I'm going to go through. This is the first one. We've got Martha and Steve. This is a couple who struggled with high interest debt in retirement, which is very common these days. So their situation, they've got a home valued at $550,000, and their home required some extensive electrical repairs. They were unable to qualify for traditional financing due to their low income. So what they ended up doing was paying for all of these home upgrades with multiple credit cards. So when they set up their reverse mortgage, this allowed them to unlock $223,000 in tax-free cash with to pay off that $60K in credit card debt. And then they were able to keep $163,000 for future needs. So by paying off that $60,000 in credit card debt, this was just the beginning. Now they have a financially stress-free retirement. They get to enjoy their golden years in the home that they love. They don't have to move because they couldn't afford those renovations. So often we see clients who want to move into a new home without having to sell their current home right away. And especially when you're in retirement, you don't want all the stress of having to have all your closing dates line up so that you're moving and moving out of the house and moving into the new house right away. So this allows a smoother transition by taking out an open term reverse mortgage. This can actually stand in for a bridge financing. So what this is going to do is allow you to embrace time. You get to manage your move at a comfortable pace without rushing. You've got flexible dates, so you can buy your new home and take your time to sell your current one with flexible dates, which would potentially earn you a higher sale price. Then it's a flexible solution. So you have the option to convert that open reverse mortgage into a standard closed term reverse mortgage if that longer term solution is more suitable. And it's a debt-free transition. To purchase your next home before selling your current home traditionally requires additional financing qualification. An open reverse mortgage makes this scenario possible without any income qualification. Okay. Next case study, Lauren and Justin. So their home is valued at $2 million. They live on a 2-acre property in Chilliwack, BC. That has become difficult for them to maintain. So Lauren and Justin's low income made it difficult to secure traditional financing. They were looking for a new home, but they wanted to take their time selling and moving into their new place. So the solution was to take out an open reverse mortgage as a strategic bridge financing tool, and they were able to unlock $650,000 in tax-free cash. This gave them the money they needed to buy their new townhouse, get settled in, and prepare to sell their own home at their own pace. And then I've got one last case study for you. This is Amir and Carmela. They're a couple from Kamloops, BC. And they were able to find financial freedom with a reverse mortgage as well. So they were facing mobility challenges, which does become common for a lot of couples in retirement. But they didn't want to move out of the home that they were already living in. So they had a property valued at $770,000. And they also had a $52,000 line of credit that was giving them a $620 a month interest payment. And they needed to do some retrofitting for their home that was going to cost an estimated $95,000. So they set up their reverse mortgage, unlocked $277,000 in cash. They took out a CHIP reverse mortgage, which is through Home Equity Bank, which cleared their line of credit and gave them the money they needed to retrofit their home, which gave them the ability to stay in their home. And still they had $120,000 remaining for any future needs. We do see this a lot more as people don't want to move. They want to stay in their home for as long as possible, maintain that independence, but sometimes they have to do some work in the home to make it accessible for them as they get older. So if you're considering using your home as a retirement income solution, there are a few options available as Canadians who are over the age of 55. The most well known and common is the HELOC, or the home equity line of credit. So this allows you to stay in your home with monthly interest payments. It does require a steady income to qualify, but you can access up to 65% of your home equity. The reverse mortgage is an alternative to the HELOC. So this is going to be a solution that lets you stay in your home without any monthly payments and will allow you to access up to 55% of your home equity. And of course, there's also the option to downsize, move into a residence that's best suited for your needs in the next stage of your life. And this may allow you to travel more with less worries around things like home maintenance. So, are you or someone you know aged 55 plus feeling the pinch of financial pressures? Well, you're not alone. Many Canadians are searching for effective solutions, and the reverse mortgage might be the answer. So here are a few signs that a reverse mortgage might be the perfect fit for you. Are you struggling to meet your payments? Are you experiencing monthly financial shortfalls? Are you relying on family support? Or are you going through a gray divorce? Or are you eyeing real estate or other investment opportunities? So if any of these sound familiar, we should definitely connect and talk about whether a reverse mortgage might be a reasonable fit. It's not going to be the best case scenario for everyone. So as I said, 55 is the minimum age where you can qualify for a reverse mortgage, but the loan to value that a lender is willing to give you is a sliding scale depending on your age. So at 55, you're only going to qualify for a really small loan to value on your property, probably somewhere in the range of 25%. But as you get older, that loan to value starts to increase because they're expecting that there's going to be less time where you're actually going to be living in that house and requiring that reverse mortgage. So by the time you're 80, that's likely when you're going to be able to access that 55% of your home equity. So it really depends on what stage of life you're at, how much money you need, if you have an existing mortgage already that needs to be paid out, things like that. So a reverse mortgage might not be the fit for you today. It might be something that works better down the road. I'll give an example. I just set up a line of credit, a HELOC and a mortgage for a client with the intention of having them pay down the mortgage and having just the line of credit, and then eventually replacing that line of credit balance with a reverse mortgage when they're ready to retire in the next 8 years. So there can be a move toward getting a reverse mortgage in the future when your income changes, you no longer want to be making those interest payments on your HELOC, or you don't want to be making mortgage payments anymore. That's where a reverse mortgage can really come in. So it's a great planning tool to kind of move you toward that stage later on in your life. So that was a short and sweet one today. So that's all I have to say about reverse mortgage. There's my contact info if you want to get a hold of me and chat more about ways to kind of maintain your lifestyle in retirement, or be able to provide for your family using that equity that you've so diligently built up over the years. So thank you so much.
Amazing. Thank you. As Jen indicated, you could reach out directly to her with follow-up questions, or reach out to Kelly and I. We'll put you in direct contact with Jen. And we hope that you enjoy the rest of your day, whatever you're doing.
Awesome.